What's up, everyone? It's Caddy with Money Investing. Welcome on board for another Market Open live stream. We are incredibly green right now with the QQQs pushing up over 1% pre-market on the back of NVIDIA earnings. We got SPY crossing over $400 once again, up over 0.5%. The Dow Jones is also green, but not by a whole lot, up another 22 basis points right now. And all of this is happening on the back of the 10-year yields pushing higher, up another 1% to 3.9.5%. right now. So hope you're doing great. If you can see me, hear me, just give me a thumbs up. I just want to make sure that the audio and the video is working well, and also make sure that you do participate in the poll. I'm assuming a lot of people are going to be expecting the markets to be green today. We did get the GDP numbers come out. We also had the jobless claims numbers come out, and that resulted in the markets to drop a little bit right around 8:30 a.m. So this right here, you'll notice that the NASDAQ pretty much dropped about 38 basis points, then it climbed right back up to new high of days at 297.57 as of the time of this live stream. And so did the SPY. It did drop quite a bit, 30 basis points, and we're right now starting to recover back a little bit. So Mohammed says, good evening, listening while driving. So yep, please only listen, don't watch the video. Don't want you to obviously watch the video while driving. But the GDP numbers came out with an actual quarter over quarter increase on an annualized basis of 2.7%. So that right there was that number, which once again does suggest that the economy is growing at a pretty decent clip. And consensus was 2.9%, so a little bit soft, a little bit shy of the expectations. And the personal consumption expenditure came in at 1.4% on an annual basis, and versus 2%, which was the consensus on Wall Street. Now, we also do have personal income and outlays coming out tomorrow. So again, that's going to be the personal consumption expenditure, the PCE, which is the Fed's preferred measure of inflation. And we'll have the savings rate, we'll have the income levels, all that stuff comes out tomorrow at 8:30 a.m. Eastern, along with the consumer sentiment that comes out at 10 a.m. Eastern. And these right here are going to be some of these expectations. And for core PCE and actual PCE numbers as well, very, very important data. And this right here were the jobless claims, which came in at about 192,000, which is a little bit soft, a little bit shy of consensus. And once again, fewer people that are filing for unemployment benefits, and that would stoke some fear that the Federal Reserve is doing a great job in terms of keeping unemployment low, and inflation's also trending lower, and they can be more aggressive, more flexible with rate hikes. But no, the markets are on a whole different stratosphere here. They just want to push higher. They just want to be green. And of course, a lot of it is happening on the back of NVIDIA. Oh my God, $233 now, up over 12%, getting up to incredible levels here, despite the revenue and the earnings declines on a year-over-year basis. Revenue was up slightly, so 1%, but now the stock is only down 32% from its all-time highs. Like that's absolutely crazy. I mean, NVIDIA would only need to go up 47% to be back at all-time highs. Just absolutely crazy to think about. So perfect. Thumbs up here. Great. Everybody can hear me and watch the video. That's great. So yeah, these numbers are out. And again, we did get some numbers from Alibaba. They beat on earnings. They're up 6% pre-market. Moderna, not so much. And Etsy, I checked them last night. They were slightly down after the results came out. And right now, pre-market, they're pushing back up. So 3.5% green. And they reported a miss on EPS, but a slight beat on revenue. So 77 cents per share coming in with a revenue of just over $807 million. And if you take a look at their pattern overall, they've just been on a consistent higher high and higher low. Like this is the overall pattern for Etsy ever since they went public back in 2015, 2016. You'll notice that we saw significant decline, a very nice bounce from this ascending support from this higher low. And since then, we've just been trading in that range for Etsy at the moment. Right now, we're back above that support at 121 and also trading above that 200 simple moving average. So that's where we are. 10-year yields pushing higher. As I mentioned earlier, they're back up to 3.9.5%. Volatility is slightly down about 2.5%. So coming back down after tagging along to 23, almost 24 levels. And crude oil here, once again, seeing buyers to step right back in, up another 1.4% from the low 70s. So it got down to as low as $73, $72 per barrel. And right now we're seeing some buyers step right back in. Bitcoin here, just over 24,000. So once again, struggling at around that resistance of 25K. And Ethereum also 1700 is going to be that resistance. Right now it's pushing higher, but this right here is going to be that level to break out of for Ethereum. So that's where we are. Green mic or no green mic, we're going higher either way, Kevin says. So again, how do you know there's no green mic? Who knows the color of this microphone under this here? Like this, that's all I'm gonna say. But no, eventually I will reveal the microphone color. What's Nvidia's next resistance? So right now we are definitely pushing higher. There's a lot of over optimism in my opinion. There's definitely a lot of euphoria for. Milan says, you've been saying this for months, we feel lied to. Well, I'm telling you, there's a green mic on the screen right now. It's already under disguise, Milan. I've not been lying. It's literally there. But it's just, I will reveal it soon. But obviously, right now, the markets are pushing higher. NVIDIA, for example, it's crazy how high this company is going in terms of the pricing and the valuation, right? So the P multiple right now trading at over 60, right? Depending on how you look at it. If you look at it on a gap basis, it's over 129. On a non-gap basis, it's at over 60. So definitely incredibly high valuation. It's not so much about the price to earnings. It's a lot more about price to sales, because price to sales is incredibly high for this company. I mean, at 20 times sales, 20 to 21 times sales is nuts. It's absolutely nuts for Nvidia. Like even for a high growth company like Nvidia, at 21 times sales, it's crazy. I mean, some of the best companies out there don't even demand such a high premium. You take any company out there, right? Microsoft, Apple, even Tesla. I mean, they don't demand such a high premium, but Nvidia is in its own league, it feels like. Yeah. So anyway, when is Bostic's speech? So he is going to be talking today. So he is scheduled to talk today at 10:50 a.m. Eastern. So later today, he's going to be talking. And then again, tomorrow we've got the personal income and outlays, we got the new home sales, and we got the consumer sentiment as well. Yeah, Sandy says U.S. is buying oil for the reserves, petroleum reserves at $72, so will not go below 72 unless we fear a recession. And yes, I mean, their SPR has been rolling really, really low. I mean, we're kind of depleting our oil reserves in the U.S., so eventually there will be, some significant support, of course. The thing is that there needs to be a faster adoption to renewable energy before oil runs out. Of course, oil still has several decades left. It still has a lot of supply, but eventually the adoption for renewable energy, for EVs and for everything needs to happen much faster if we're going to transition away from fossil fuels and carbon. So, but of course, right now, just low 70s, it's been trading sideways, lots of support there. We also heard from, the OPEC countries kind of pulling back on the production of oil. In other words, supply was being cut 500,000 per barrel a few weeks ago. And that once again, caused a bit of a rally once again. And right now we're just trading at supported low 70s. Kevin says he still won't do it. Only if there's a coupon. You guys know me way too well. Yes, only there's a coupon. Maybe I will bring out the green mic. But yeah, I mean, the markets right now, S&P 500 getting a little bit of a bounce from that support at around 4,000 or 39.90. We got down to 39.76, so that was a perfect support level here. And right now we're seeing the implied open at another 0.5% green, so we're probably going to be opening up at around 4,000 plus. So once again, we're back above 4,000, and then Nasdaq also validating that support here perfectly at around 11,500. And once again, we're seeing a pre-market implied open at around closer to 11,600. So once again, there's going to be lots of buyers stepping in, and it's possible that we see a big green day today. And again, a lot of people expecting 69% people expecting the markets to be green. Did anyone watch Caddy's new video featuring Tom Lee? Yes, so make sure that you do check that out. There was some very interesting analysis and research done from Tom Lee and Frontstrat, and that, you know, those three signals pretty much have 100% win ratio, and it's quite interesting, you know, what he talks about. And of course, we also talk a little bit about the Federal Reserve's in the past historical Fed chairs, you know, Paul Volcker, and of course Arthur Burns and William Miller, and going over to back in the 1970s, 80s, and 1990s, and how they kind of you know, managed monetary policy and kind of guided the interest rate decisions moving forward. And that, as a result, resulted in not just the markets, you know, basically consolidating, but instead pushing higher. So that's, again, very interesting from their research, is that in the past 14 rate hike cycles that lasted over 12 months, 11 of them, the markets actually hit a new all-time high, despite the Federal Reserve actually raising rates. It was only a couple times under Arthur Burns from back in 1970s when the markets actually went down. And the third time, it's only happened 3 times, right? Twice it happened under Arthur Burns, and the third time, anybody want to take a guess when that happened in the last 14 rate hike cycles? Which was the third time it happened where the markets went down during the Federal Reserve hiking cycle? Let's use actually watch the video. I'm curious to see who actually did check that video out. Yes, we'll take a look into it as well when the time comes. They are going to be reporting earnings very soon, but so Milan says, I just watched It's the Guy After Burns. So William Miller, unfortunately the answer is no. It's not William Miller. Let's see, I'm going to wait for a few more people to kind of, can't remember his name. It's not William Miller. It is somebody you know. It is somebody that is famous as a Federal Reserve chairman. What are you asking? Kevin, that's what happens when you sleep during my questions, man. No, what I'm asking is, in the last 14 rate hike cycles, right? Every time the Federal Reserve has hiked interest rates, the rate hiking cycle that has lasted over 12 months, 11 times over the last 14 times, the markets have went up to new all-time highs as the Federal Reserve is hiking rates. So the 3 times the markets actually went down when the Federal Reserve was hiking rates, the 3 times that it went down, 2 of those 3 times happened under Arthur Miller. What was the third time when the markets went down when Federal Reserve was hiking rates? It's really not that difficult of a question. Even if you didn't watch the video, you should literally just listen to what I'm saying. Which was the third time when the markets were going down as the Federal Reserve was hiking interest rates? Powell, yes, thank you. Roshan, yes, it was Jerome Powell. It was him when he was hiking interest rates. The markets went down, and it happened in 2022, right? Literally last year. So quite interesting analysis and research put together. So definitely check out that video if you're interested. There's a lot other details in terms of some of the thrust indicators that's going over advancing and declining stocks, and some of the signals that have played out in the last 7 times, and how they have 100% win ratio, and what's the average 12-month forward gain on the S&P 500 moving forward. So, okay. So Kevin says Bernanke. I mean, that will wake people up a little bit. So again, Kevin says I'm not sleeping. I'm making memes. Hopefully not memes on me or the mic. Leave the mic alone. I'm just kidding. No, I love your memes, so keep them coming. So I'm going to end the poll here. We still have actually a few minutes, so let's keep going. But if you have any companies you want me to go over, I'm happy to. In terms of earnings, I mean, you know, we can take a look at Domino's and Wayfair, but I'm just going to skip over those for now. We can take a look at them, you know, at a later time. Lucid, I briefly covered Lucid earnings in Tesla's video yesterday. NVIDIA also, I did a more dedicated video yesterday. You're more than welcome to watch. Unity Software, we got Etsy, and also reporting Etsy slightly higher. And then let's take a look at Teladoc very quickly, and let's see what type of day Cathie Wood's gonna have, because Nvidia is already pushing higher, but Teladoc is slightly down about 2%. So they missed on EPS. Wow, reported negative $23 per share in loss. That's crazy. I mean, that's got to be something related to their one-time expense, or let's see. So okay, Teladoc racks up billions more in goodwill charges, gives downbeat earnings forecast. So I'm surprised how well the stock is kind of holding up, you know, after hours after they reported earnings. But again, they basically acquired a company. I forgot what their name was. We did a video not too long ago, but Man, I forgot what their name was, because they had to take like a huge goodwill charge on that company's valuation because it dropped pretty substantially. What was that company? Teladoc, but forgot what it was. Yeah, we can take a look at eBay as well. eBay's numbers were not super great. Yeah, but Teladoc recorded a $3.8 billion impairment charge during the quarter, building on charges taken earlier this year. Yes, Tristan, I think that's a very good point. This is very important. It was not all Paul Volcker that brought inflation down at globalization and the awakening of China as emerging superpower and economic power. And of course, globalization is a big key role there. And of course, having global trade really helped bring the supply up and bringing prices back down. And Paul Volcker obviously came in 1979 and he, jacked up interest rates. But even before that, there were a couple attempts to bring inflation down. They were pushed higher between Arthur Burns and William Miller. They did raise interest rates from 4 to 20%. But before that, prior to that, obviously there was very, very easy monetary policy, and along with that, fiscal policy was very, very loose, resulting in inflation to kind of spiral out of control. And eventually, it was brought down in the 1980s under Paul Volcker. But of course, he does get all the credit. But there's a lot of lots of stories behind that as well. It's not all just him raising interest rates and bringing inflation down. There's a lot of other things that go around it. Yes, Livongo, was it Livongo? I can't remember. Livongo Health, I think it might have been that. Yeah, so this was the company that they did acquire, I think back in 2021, but definitely did take a lot of impairment charges and resulted in some serious damage to the overall balance sheet of the company. I mean, I remember first time when they reported, so negative $41 per share. We've done a couple of videos on them, but I'm actually surprised it kind of held up really well today. Only down 2.65%, so not really selling off quite a bit, but resistance is going to stay put at $44, $45 right now. Okay, so let's see. QQQ support resistance levels. Right now, what we're really paying attention to is a huge open, 1.28% green pre-market. So that next resistance really is going to be all the way up to $300. So 361, so around those levels. And support level is going to stay put around 297.37. So if you do sell off intraday, that right there is going to be that support level to watch for QQQs. So let's take a quick look on Alibaba, see what they reported. So they are pushing up 6%, 5% right now pre-market, back up to $99. So let's see if you have any updates here. So 5% posted fiscal third quarter adjusted earnings of about $2.79. And that's up from 16.87 renminbi a year earlier. So that's pretty decent growth. And analysts were expecting 16.52. They reported 19.26. So good earnings. But let's see if we can get the update on revenue as well. So EPS is already here. And revenue edged up 2% to 247.76 billion, just ahead of the street consensus of 246.5. And Chief Executive Daniel Zhang says, and I quote, "We delivered a solid quarter despite softening demand, supply chain and logistic disruptions due to impact changes of COVID-19 measures. Looking ahead, we expect continued recovery in consumer sentiment and economic activity as well." So Alibaba, still remains a company that is severely, or in other words, deeply undervalued, so to speak, compared to its peers. And, if you kind of run some comparable analysis, Alibaba, you would come up with a much higher fair value. But it's just, one of those companies that hasn't really fully realized its fair value yet. Of course, there's been a lot of geopolitical tensions. There's been a lot of regulatory issues with Alibaba over in China, the tech crackdown over in China as well. It's all kind of played a big role in not just Alibaba, but a lot of Chinese companies. But since, October, it's done really well, rallied quite a bit, more than doubled, but more recently it's kind of hit that resistance and coming right back down. So 200 SMA is going to be a very good support at around $93, $94, and the resistance stays put at around 120 for Alibaba. So GDP numbers were garbage. I'm surprised we're up. So they were not super great. We definitely came in a little bit shy of what the expectations were. But again, that does suggest that we are still growing. At least as a fourth quarter, we did grow 2.7%, quarter over quarter, and 2.9% was the consensus. And I mean, there's a lot of reasons, we can kind of talk about how the markets, in terms of inflation, in terms of unemployment, in terms of GDP, everything, if you kind of put these pieces together, you would assume the markets to be down because the Federal Reserve is going to be more aggressive. It just gives more of a reason for the Federal Reserve to be aggressive because the GDP is strong, unemployment's tight, and inflation's still high. You would assume that the Federal Reserve is going to be tight and they're going to be aggressive and they're going to keep raising rates. They're going to be hawkish. And even if they are those things, the market doesn't care. The market literally just does not care. It's straight. And the fact is that today the markets are higher despite the yields pushing higher. I mean, we're seeing the yields get up to 3.978%. That's the high for today. Like we're almost at 4% 10-year yields, and yet the markets are just booming, absolutely booming right now. So yeah, that's where we are. Quite an interesting market sentiment right now. I'm going to end the poll 70% with a green bias on the day. Not surprising considering how green we are right now pre-market, and QQQs are literally not taking a break. They're back up to 298 right now. And SPY also pushing up to 401. We're about to see a pretty wild open here on a fine Thursday morning. Microsoft's up 0.72%. Tesla's up almost 2%. Microsoft is up 1.5%. And again, Google is up 0.5%. And then Apple is up 71 basis points. AMD on the back of NVIDIA is getting some good gains as well. Pre-market, it's up 5.5%. So I will definitely be selling some covered calls on the day. I already got my options chain open on AMD. As soon as the market opens, I'll be interested to see where the premiums are. Most likely about $85, $90. We'll be looking at those 31 days out. And we'll see if the premiums are good. We'll most likely, absolutely, we'll be selling some covered calls. So Chris, yes, I think we've done a couple videos on this topic. We've definitely seen, guys, right now we're at 69 likes. Come on, are you guys trolling me right now? We can definitely, get up to over at least 200 likes, but don't just leave it at that number. Come on, let's just hit that like button, get this up to at least over 200. But yes, when it comes to the retail traders, we've actually done a video on that. I think we have seen a lot of momentum from retail, and they've been net buyers of stocks, right, in the last couple of months, and we've really seen retail kind of drive this market higher. And one of the things that's quite interesting is that institutional, for the most part, I think is still sitting very much on the sidelines, and because of all the uncertainty, and especially when you consider the 10-year yields, when you consider 6-month yields and 20-year yields, the bond market in general, there's a lot of conservative investment opportunities out there in the market, especially when you are a hedge fund manager or institutional manager, when you're managing like billions of dollars. You're not too focused on taking on too much risk, but instead your main goal is also capital preservation in the middle of all this uncertainty. So you're more flocking towards a little bit more safety, which is going to be the bond market for you. But the longer you sit on the sidelines in cash and not invested, the more pressure you get from investors and from clients. So eventually, if that money once again makes its way to the market and the liquidity starts to come back in, it's possible that we see this euphoria kind of drive to new heights and the sentiment continue to even higher levels. But we got to be realistic. Kevin says no likes until green mic, but we definitely have to be realistic, right? We have to ask ourselves about the valuation, about the what's happening with the macro perspective, interest rates, inflation, all those things, and just all it really comes down to is, are the fundamentals lined up with where the prices are, right? Is the value equivalent to the price itself? If there's any discrepancy, right? If the price is way higher than the value itself, then it's not a good deal. If the price is trading below than what the value actually is, then it's a great deal, right? So that's bottom line 101, what it comes down to. And that's what we're here to analyze. Individual stock bases, index bases, all we're trying to analyze is whether the value matches up with the price. If it doesn't, then we have to look at where those discrepancies are, where those opportunities are, pretty much. So anyway, we got the NASDAQ opening up at over 1%. We got the S&P opening up over 4,000. And the Dow Jones also up over 33 basis points right now. The 10-year yields are still above 3.927%. Lots of individual stocks also gapping higher. Google is now red, seeing a lot of sellers step in right at the open. Apple is up 68 basis points. We got Microsoft green, Tesla pushing up, and Netflix for some reason is down quite a bit, 2.3%. It's the only FANG stocks that is actually selling off. Google is flat right now, and Nvidia here up 12.6%, just absolutely insane at the moment. This reminds me, I got to take a look at what the AMD covered calls are going to look like. So right now we're trading at $81, $81.14. So wow, for March 31st, the premiums are not super great. $85 is still $1.75. This was the same as like before the markets open. $90 is about 87 cents. So still not super great premiums. They're okay. I was expecting a little bit more from AMD. But we still have the rest of the day. We'll see if any of the calls get bid up here. Kevin says wait 15 minutes. LUNR stock. It's a gain of 150% from last 2 days. So again, if it's a small cap stock, then we're not going to be able to analyze it. But let's see. Yeah, so it does seem like, no, it is a $3 billion market cap company. Lots of volume. Seems like a very, very fairly new company, so to speak. But we really don't have any fundamentals to begin with. But again, space exploration, infrastructure services, offers space products and services. It kind of reminds me of Astra Space, ASTR, right? They are also in a very similar sort of market. But I mean, that's what happened, right, when they first IPO'd, right? Back in, it kind of looks like the early stages. Like if you take a look at this right here, right? I mean, they rallied, a little bit over 60% in just the first few days. And then eventually, of course, this is the whole chart. And not saying that LUNR is going to be that, but, we definitely have to be careful with, how this trades right now, because it's definitely pushing up quite a bit. I mean, it's already up 1,000%. So the market cap has just skyrocketed and lots of volume as well. All right, so we are seeing a little bit of a pullback intraday. We'll see if we continue to hold up. So 85 March 31st is 270 now. I don't know why it's not showing up. Maybe I have to reload this. Yeah, 85 is still showing me 175. I don't know what's going on. I think it just needs to load up a little bit. I don't think these are updated yet. So the premiums are not updated. Webull definitely does that. Like as soon as the market opens, it lags so much that you can't even get access to the actual real quotes, which is quite frustrating sometimes. But QQQ coming down to that support down to 297.38 a little bit. So we're seeing some buyers step in, and right now we're back trading above almost at that middle VWAP here. So that's going to be the level to watch. And right now we're seeing some buyers stepping in once again. Aaron, thank you so much for joining. I really appreciate it. So DigitalOcean, I have done a video on in the past, but I will do like an updated video on them very soon. Not sure when they're reporting earnings, but I think we can definitely take a look at this company. But I feel like I have done a video on them before, most certainly in the past. So, okay, they recently reported earnings, beat on EPS, beat on revenue. Decent beats, and right now I feel like they're just going to be turning the corner towards profitability. They have a couple quarters of profitability in the past, but once again, reporting the fourth quarter with a loss, negative $10 million, but I feel like on a non-GAAP basis, they might be profitable already. So this is a company that we can potentially look into, and right now, it's trading at about under 6 times sales, 16 times cash flow, and about a little bit high enterprise value EBITDA, 49 to 50, which is actually quite high. And the one thing that I really do like here is that the share count is going down. So they are buying back shares quite consistently over the last 4 to 5 years. So that is really good. But it's just about profitability. So maybe we can take a look at this company. It's still, I mean, not that far off from its all-time low at $23, $24. So maybe that's something that we can potentially analyze. All right, so the market looks like it is still green with a big gap up. However, we are coming down a little bit to maybe fill that gap. We'll see. Dow is up 36 basis points. We got the S&P up 70, and the Nasdaq is up 91 basis points. But the price action itself is not super strong right now. All right, I'm actually curious about Nvidia. How many people here are, or let's just do this. Tell me the price at which you're willing to buy Nvidia at. What is a price where you're absolutely willing to go all in on Nvidia? Is it the price where it's trading now? It could even be higher, right? So you mean it could also be like where you're already buying, and even if it goes higher, you'd still be buying, or it could be a lower price. I'm actually kind of curious because, okay, so lots of hundreds. So we got hundreds, 150, 125, 120. Developer artists even more brutal at 75. Justice at 80, JP at 90. Matthew 150. We got 90 to 100. So most of you are in the hundreds. Some people are really brutal with that low 100s, and of course even below $100. So okay, so it's kind of crazy. You know, I was kind of going crazy. I was like, how is this company still trading at where it is right now? I mean, trading at over 20 times sales. It doesn't make any sense. So. But yeah, I think my fair value is also closer to around $90, but that's also me being like super strict and super, conservative in my analysis. But even if I do go a little bit more generous there, it ends up at around 120s, 130s. So it's very much in line. So yeah, lots of short squeeze as well for Nvidia. I mean, one of the companies that has seen a pretty significant short squeeze, I would say, is Upstart. Upstart has seen some significant short squeeze from lows of about $12. I mean, it's rallied over 105% in just a matter of like 30 days, and that's what happens with Upstart. Like when you're on the Upstart train, it is going to be very, very volatile. Upstart is literally the most volatile stock in the market right now, or it has been in the past as well. I mean, it goes up 100%, comes down 80%, goes up 1,000%, comes down 40%. It's just all over the place, and it is one of the few names that's actually heavily shorted. Nvidia, I don't think it's heavily shorted, but yes, there are shorts in this stock as well. That could have driven this rally, and of course, a lot of it has to do with retail, because we looked at the top stocks ever bought, right? We looked at retail audience and which companies were bought among retail traders, and believe it or not, $1.5 billion were poured into the market per day by retail traders, and most of that money went to Tesla, it went to Nvidia, it went to Meta, it went to a lot of the big tech, of course, and QQQs. So those were the names that they were basically buying in the first couple months there. Dude says, Caddy super conservative, you think? So Matthew says, Nvidia burned me today, so I'm not a fan. Yeah, I mean, that's one of the things with Nvidia is, like, for a fact, I knew that the company in itself is overvalued, but I'm still not willing to take a short on this because, as I pointed out before, the sentiment is way too strong on this stock, right? Sometimes you will find yourself in these situations, is that something for a fact that company might be overvalued and this is not sustainable, and your thesis is a long or a short thesis, but it may just not play out, right? It may not play out because technicals or sentiment or the broader markets, whatever the case might be, it may just not play out. So even for a fact that if Nvidia is overvalued, should not be trading at those levels, it's still not going to drop, right? And it's kind of a little bit of a counterintuitive as well, because the reason why it's overvalued in the first place is because there's so much demand, right? The reason why they're trading at such a high multiple is because investors are excited about the stock and they're willing to pay such a high multiple for this company, right? So that kind of shows you a little bit more about the sentiment. Okay, it's very strong. So if you don't want to get burned, just be conscious about that, and obviously not take a short. If you will, just be very careful with your risk management. So Chirag says, 5 contracts, NVIDIA, $2,500 sold today for $12K. I'm done for the month. That's great. So again, selling options can be very lucrative if done right. So definitely do agree. I think it's a good way to make some passive income there. Okay, what's your question up there? So consider today's prices of most important stocks for you. We're channel for a long time, and I know, and for me, Amazon, Google, AMD, Meta, etc. What do you think they will be in 1 to 2 years? So again, when we do our analysis for a lot of these companies, all you have to really do is to get to that price target, you have to multiply them by 14.35% to be precise, and and then have a power of 5. So to give you an example here, let's just do this. Let's just do our intrinsic value calculation on NVIDIA, right? For example, so if we take a look at, let's just say NVIDIA at 35 and 30, right? So right now it's trading at $235. Where is it trading right now? 232. So 232 is where it's at. And if this is your analysis, right? If this is what you believe for NVIDIA to be true, that it's going to be able to grow earnings by 35% and it's going to be demanding a 30 times PE multiple, and your fair value is at $232, all you have to do then is multiply this number, $235.72. You multiply this by 14,385, right? That's going to be that number. And then you basically put this in over 5, right? The power of 5, because that's what's going to give you the actual target price. And that's what we have over here, all the way up to $461, right? That's going to, because the math behind this really is that they're going to be able to grow earnings by over 35% compounded over the next 5 years. And the P multiple is going to be at 30. So the stock price itself is going to be growing at a compounded annual rate of 14% because we're using a 12% discount rate. If you use a higher discount rate, let's just do 20%, you can see the fair value drops because our threshold for a rate of return is much higher. If I go with, let's just say 6% discount rate, then the fair value jumps up to 310, right? So discount rate is what I use at 12%, and the margin of safety kind of 10%. Accounting for that, it brings our annualized rate of return at 14.385%. So to answer your question, long story short, in 1 to 2 years, you basically just multiply it by 14.35% year 1 and year 2, and you'll get the target price expected, at least that's the expected target price for those companies. Now, obviously, is that going to be accurate? No, it's not going to be to the decimal accurate, but that's what the expectation is from a lot of these companies, right? So for Meta, I think the fair value is closer to $120. So, or I think it's a little bit higher. It's closer to $150. So in about a couple of years, the expectation would be for it to be trading at almost at $200. Yes, Tristan, for sure. I will see if I can find the time to do that video on max pay theory. I think that will be very helpful for a lot of members. Anyway, so QQQs, or in other words, NASDAQ, still up 81 basis points, trading a little bit under 11,600. We've got the S&P 500 also green, trading back above 4,000. We got the Dow Jones up over 30 basis points, still green, but definitely struggling a little bit. Let's see how AMD is doing. AMD definitely selling off quite a bit. I mean, why isn't this thing loading up? Oh, there we go. No, it's the same thing. It's just not up to date. I definitely did miss out on some good premiums with all this Webull VS. It's just not even loading up with the premiums, but I'm going to have to jump off the live stream and then, of course, definitely trade some options there. Yeah, Lucid, they only have a runway for another 12 months. So after that, I think they're going to have to figure out new ways of financing or raise more cash through debt or equity or something, because they definitely don't have a lot of runway left. That's I think a really important lesson, not just Lucid, but in general. For any company that's coming into the market, one thing that I've learned the hard way is that every company that goes public can sell you on the story. They can all do a great marketing pitch. They can all do a great sales pitch, right? They can all give you a great story and connect with you and create a great brand. But very few companies can be real businesses over the long term. Very few companies that can actually execute at the high level and be able to create a real business and become profitable, become positive cash flows. Because look, the qualitative analysis is very difficult to price in, right? We can't price in how competent the management is, right? That's qualitative, right? You can't put a number to it. But at the end of the day, I think quantitative is really what matters to investors more than the story. I mean, if the story is great, but they're burning cash every single month, they're not profitable, eventually they're gonna go under. They're gonna go bankrupt. But even if the story can be improved upon over time, but if the numbers are solid, the demand is solid, and if they're profitable, business is booming, then I think the story can be worked upon over the long term. But financials, really, that's what matters over the long term. So anyway, that's going to be it for today, everyone. I really do appreciate you guys tuning in. And markets right now still pushing through. Microsoft seeing a lot of buyers step in. Apple pushing up back above its middle VWAP right now. And Tesla's also green. And we got Google here slightly lower. But overall, we're seeing some buyers stepping right back in. But I'm going to jump over to our Discord now. Send out some alerts. And again, answer any questions if you have anything over there. But hope you guys enjoyed it. Found it helpful. If you did, make sure that you drop a like, subscribe, and the link to our Discord and Patreon is going to be down below if you're interested in joining us. So happy investing, and I will see you all in the next live stream. Take care.